Good afternoon, everyone. It's Doc here from OnTheMoneyOptions.com. It is Monday, November 26, 2018, and this is our weekly technical analysis. I'm going to change things up a little bit today and do it just a little bit differently. Instead of looking at some of the technical analysis charts that we look at each and every week, we're going to look into the sectors a little bit. And the reason why I want to do this is because a lot of people are saying, we might have a recession. Well, in case you didn't know, you might have already missed it because over half of the stocks on the New York Stock Exchange are down 20% on the year. So now is a good time to look at the sectors and where this happened and where these rotations took place and look for opportunities going forward. We're going to start with the overall market, and this is a point and figure chart of the bullish percent indicator for the New York Stock Exchange. And each one of these boxes represents 2% of the number of stocks on the exchange. And as you can see, we're at 38.99% right now, meaning that 38.9% of all the stocks are on point and figure buy signals. That also means that, roughly 60% are on sell signals. Now, I've drawn a line through the middle of the chart. This is called the pivot point. This is the point on the chart, if you can, and you can count this yourself. This is a point on a chart where there are the highest number of X's and O's in a line. That means this is the place where it crosses back and forth the most number of times. So we look at this as a pivot point, and you would expect us to be in a bull market above the line and in a bear market below. Well, obviously we're in a bit of a bear market. So I'm going to go through each and every one of these, and then I'm going to just sort of guesstimate what the pivot point. This first one is the consumer discretionary. And as you can see, we're down to 30%, very low. Historically, you can see that that's low. The pivot point looks like it's about the 62 level here also. So this is well below the sort of the norm for this. This chart is the bullish percent indicator for the technology sector. And as you can see, we are at about 42% here. The pivot point is usually quite high here, generally somewhere around the 70 level. You can count these out. You can stop this and count it out yourself if you'd like to understand. But what I'm saying is that we're fairly well below the pivot point for the technology sector. So there should be a lot of opportunities here. Looking at the industrial sector, it is at 39% roughly. And as you can see, it's down considerably from where you see this little A up here. This is October when it was at 70%. It dropped all the way to 20% and now has retreated back to about 40%. So there's a lot of opportunity here in the industrial sector also. This is the material sector. The pivot point for the material sector is usually in the mid-50s. We're currently at 37. And as you can see, we've had several rotations in and out by looking at these changing column of O's and X's. So there's a lot of opportunity here also. This is the energy sector. As you can see, in 1st of October, we were at the 60 level, and we're at 3.44% now. That means that 96% of the stocks in the energy sector are on point and figure sell signals. Now, if there's ever a good opportunity to get into a sector, it is when it comes off an extreme low or an extreme high and reverses. So keep a real close eye on this one. Once it goes back through the 20, I'd be getting on some energy. This is a consumer staples. Again, we've come from a pivot line generally here in the mid 60s. We're at 46%. We are on a point and figure sell signal. It's a bear correction that happened on 12 November. And this still represents a lot of opportunity because this is a defensive sector where people are going to want to move. This is the healthcare sector. The healthcare sector was up around 80. In October, you look for the little A. A is for October. We were at 80%, and then we dropped all the way to 20. We've come back up, and currently we're at about the 50% level. So half of the stocks on the healthcare sector, which is very, very defensive, are down and may represent opportunities to get in. This is the utility sector. The utility sector runs fairly high. The pivot point here is probably in the 78 level. And as you can see, we're currently at 86. Utility's been outperforming, so 86% of stocks in the utility sector are on point and figure buy signals. So this one looks a little saturated right now. It may have some opportunities in it, but I'd be careful looking around in there. The last sector we're going to look at is the financial sector. The financial sector reached a bottom of 18 and has moved back up to 32, and now it's back down to the 30 level. So it has a lot of opportunities here, and I would take a deep look into this one. Just to give you an example of what I'm talking about, I did a quick search in stockcharts.com just in the financial sector year to date, and here's a small sampling of the stocks, large cap stocks in the financial sector that are down more than 20%. So as you can see here, there's a lot of opportunities for you to find some really nice stocks to get invested in if the market begins to move back up. There are two charts that I want to talk about this evening just very quickly. First of all is the rate of change of the SPY. You will notice in the thumbnail on the right-hand lower panel that we are negative at this point. And this is something that I like to keep an eye on because this, as we've seen in the past, is really important. Now, there have been times where it's dropped down just below it just for a few days and then moved back up. So maybe this is not a big deal, but I want to keep an eye on it anyway. And I just wanted to bring your attention to it. I also wanted to show you this chart. This is the put call equity only, and as you can see, we're in the extreme pessimistic area again. There's a lot of puts being put on, a lot of protection being put on, and that cuts both ways. One of the things is that might be a warning sign that things might go down more, because with enough protection in place, the big institutional traders don't mind it going down. So anyway, this is a quick look at technical analysis. I wanted to do a deep dive into the sectors for the week. There are lots of places where you can find good opportunities, and maybe we'll touch on some of those in the next few days. So until next time, this is Doc saying stay hedged, and I'll see you later. Bye-bye.